you can't blow up a $300 trillion debt balloon and then shrink it down more than about 10%, before everything's rattling and the wheels fall off the car. And that's what's happening. So what do you do in the meantime? I mean, stay out of the hurricane, man.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and back with us today is E.B. Tucker, editor of the Tucker Letter. E.B., thank you so much for joining us today.
Thanks for having me.
Well, it's great to have you, and exciting that you're now writing again here, and we'll put a link in the description of this video to your letter there. I wanted to ask you right now, kind of to get your take on what is happening right now in the financial system, especially with the banking crisis. It seems like over the last few weeks, kind of the whole system started breaking, and now kind of there's some kind of maybe a calm right now, or your perspective on what's going on right now.
How about the perception of calm, which, as you know, nowadays, if you just virtue signal, it's better than reality, right? So we've got a perceived calm, which maybe is better than real calm these days. So the thing about I wrote about all this in my newsletter, but it's people have been asking me, like, please come back, please start writing again. I took a 3-year break, as you know, wrote a book, all these things. But ebtucker.com is the way people would see this. I just wrote about what's happening in the banking system. And people need to understand that a lot of my content's free, because when I was coming along, it was very difficult to learn. And as you know, you've been on a journey as well, that you've got to have somebody saying to you, this is what's going on, and it's free of marketing. And it's just, this is what's happening, and let's learn together. That's the deal. So you're exactly right that what's happening is things are breaking. And last year we said, if the Fed raises rates this way, they're going to do it till something breaks. And that's going to keep going. That's not done yet. But if you notice, the dirty little secret, which I share this in the most recent newsletter, is that they're raising and breaking things on one side of the ledger, and then they're bailing people out on the other side of the ledger. So it's really the ultimate exercise in being two-faced. And why wouldn't they do this? Because the game plan is that ramp these rates up, pull the dollar strength back in, firm up your billy club so that you can use it around the world. But at the same time, if anything cracks over here, make sure the right people are taken care of, because you don't want to have too much instability at home. Mom and pop might start getting worried, if they actually couldn't get their money out of the bank. There's 17.5 trillion roughly of deposits at banks. Think about that. There's a lot less than 17.5 trillion there. And as long as you don't think there's a problem, then there's not a problem. So that's what's going on. I don't really think banks are the biggest issue here. I mean, banks are about what they've always been. They're kind of like money utilities. Think of it like your local power company. That's really what a bank is. And I don't mind owning some bank stock. I mean, I think you got to be patient to buy bank stock. I mean, in the newsletter, we manage a portfolio for a trust, and you'll see the stocks that I buy, right? So for the trust, and these are boring stocks. They're not like overnight success stories. I mean, we're buying things like, we will buy a bank at some point because it's a really good business. I mean, you essentially take a few pennies in the door and they loan out a few dollars, and it's I don't know if anything really that's as good as that. And you have government support, and if anything goes wrong, then you just taxpayer takes care of you. It's kind of like, let's not overthink this. I mean, that's a pretty good business. The issue is that a lot of these people overexpose themselves to dangerous credit that became less valuable as the Fed did this radical policy move. And so, and I don't think people need to really worry about that so much, because it's a bit nuanced. It's a bit complicated. The big picture is you can't blow up a $300 trillion debt balloon and then shrink it down more than about 10%, before everything's rattling and the wheels fall off the car. And And that's what's happening. So what do you do in the meantime? I mean, stay out of the hurricane, man. That's the deal. If you're low debt or fixed rate debt and stable income, and you don't spend excessively more than you make, you should be sleeping all right. I mean, there's a lot of other campers that are going to get eaten by the bear before the bear gets to you, and that's the name of the game.
Now, one of the things that people are concerned about, as you mentioned, how there's this $300 debt bubble and you can't shrink it before the whole thing starts unraveling. How do you see this really playing out from here with Fed actions and how the system is going to be impacted? Some people are saying, well, the whole system is going to come down. Other people are looking for kind of just a slow collapse.
Both of those are extremes. I love when people say the U.S. dollar is going to fail, and I say, look, man, I mean, it's probably not going to fail. I mean, are there problems? And yeah. I mean, of course, like so what's going to happen here? I mean, it's not going to. It's you don't wake up one day and the whole system is stopped, and then you're using 6 pieces of Chinese paper currency that you got on a field trip to pay for groceries. I mean, forget about it. This is like dreaming. I mean, this is not what's going to happen. We're in a position of change, okay? And that change is the world is reorganizing, okay? So you've been in this scenario for a long time where the U.S. was like the king of the playground, and the U.S. is still very powerful. It's going to remain very powerful. The world is kind of like shifting into zones per se, and so there's some of the influence that is realigning itself, and so everybody's going to battle stations over that, and the U.S. is still going to maintain a lot of control. And I think that people need to be realistic about how this works. Think back to the COVID crisis emergency situation that we were in for some time. When did that stop? Look at each country. In Canada, it stopped when the truckers blocked all the bridges and things got way out of hand. And you know what happened? Like the next week or whatever, they're like, okay, turns out we will let you go without a mask outdoors or whatever the rule was. Okay. And everything got kind of dialed back, right? In China, it went longer until there was the issues at Foxconn. There were some fires in some neighborhoods where the rescue people couldn't get there, and people like really kind of lost it. They really lost, and they got really upset, and then they started dialing all these things back. My point here is nothing to do with COVID. I don't want to touch that. My point is that the pain will go, the shaking and rattling will go until something rattles so hard that mom and pop are ready to pick up sticks, and look for a congressman. Okay, so we're a long way from that. I mean, I was in Texas this week. I was talking to some flex jet pilots, like the private jet pilots, and they were telling me that they just come out of Palm Beach and there were 415 landings in the Palm Beach airspace the day before, and it was like too much for the air traffic control to handle. And I don't know if you've ever flown in private aviation, but man, you're just like torching jet fuel. You got like way more equipment than's necessary. And I mean, it's like excessive. And think about it, man. They can't even fit all the planes into the airspace. I mean, it's booming out there. You can't get a reservation anywhere. It's crazy. You can't find a plumber to install, something at your house. And all that stuff, it doesn't matter. The little details that don't matter. What matters is that how much fuse is left to burn before something really starts shaking. There's a bit more. And so while that fuse is burning, seek cover. I mean, like, get your house in order. That's the deal. You don't need to buy 7 years of dried food or something. I mean, you just have to say, are there any vulnerability points in the next, X number of months that I need to should I just button these up today so that I can sleep and keep my blood pressure in check over the next few months? There's a lot of problems in anything that benefited from ultra cheap money. Okay. So like, what would that be? Well, that would be, I have a friend that sold an apartment, for example, The people that bought the apartment was a pension fund, which has access to ultra cheap money, and they bought the thing for like a 3% return, piled debt on the thing. So now let's say that's a 5-year loan, 7-year loan. Okay. All right. Whenever that comes due, they got to be in the market to roll that loan over. The loan's going to be, probably instead of 2%, it's going to probably be 7%. And the value that will be loaned against is going to be lower. Okay. Believe me, people, this is not over your head. It's ultra simple. Okay. And so what that means is you got to raise the rents. And then you say, wait a minute, people can't pay much more rent. Okay. Because nobody's really making that much more money. You get like a 6% raise at your job. It's not really helping. So that means the value of the apartment has to come down a little bit. And if the value comes down a little bit, well, they only put 10% down. So it can't come down more than 10%. And then they don't really have that much more money to put in because they got to get it from the pensioners. You see how this goes? So what do you do there? Well, you extend the loan. So you extend and pretend. That's what they used to call it. So you extend the loan a little bit. You do that a few times. Well, that hurts the value of the building next door. Now you have your comps are bad. You see how this goes? So the ultimate solution for this is to turn around and start pumping this debt bubble up again. That's what's going to happen. Okay. So until that time, you got to stay out of the crossfire. That's what you got to do. And it's not that hard. We talk about it in my newsletter all the time. It's like, it's not that hard to do. You don't have to do crazy things. You don't have to make some huge gamble on market correction. And then I get these crazy emails. I can't answer emails. So I'm not a financial advisor, so I can't respond to these. But I read these emails and I just think, are you even reading the newsletter? They'll say, should I buy the 3 times leveraged daily short fund or something? And I'm thinking, how is that even a question? Like why would you even do that? We just got done recommending the #1 provider of frozen French fries for the food service industry in America. It is the coolest stock I've ever recommended. It's amazing. You will not believe like the videos of how they harvest these potatoes, cut them, fry them. And then I walk around with my kids on the weekend. I'm like, look at these people. French fries, that nobody in America is cutting out French fries. All right. Like people don't really want to walk much in America. You notice that? They'll walk before they'll cut French fries. You see what I mean? It's like, it's an American staple. And that's the kind of stocks you want to own because that's not going to get cut out of someone's budget. And if you got to raise the price of French fries 10%, no problem. It's going up. I'd say it's better than oil. I think people are likely to not drive somewhere before they're going to cut out their basket of French fries. So, anyway, we talk about this stuff all the time. And then I get these messages from people, should they gamble? And I'm just like, there's no reason to gamble this way. Like in your investing, you're split-minded, right? Like you have like a responsible person, which I call the trustee, and then you have a gambler that's kind of crazy. And these are real parts of your personality, but like the instinct to gamble is still alive. Okay, that's my point. When this market's ready to turn around, people are panicked. You can see the whites of their eyes, right? That's not happened yet. And that means that the Fed can keep on. They don't really need to go higher. It's just that they can keep up the pressure. Like 4.5, 4.75, this is a really high rate when you have a $300 trillion debt bubble. Okay, that's like a really high rate. Remember, it was zero. So like 0 is a really low number. If your business can make 0 profit, you can borrow. Okay, that's a really low bar, man. That means that any business works. Okay, but that's done. Okay, and now you're up here at 4.5, which is still less than inflation. That's what's amazing. If your business can even keep up with inflation, you can afford to borrow. But some of these businesses are so terrible they can't even keep up with inflation. So it's a total mess. But what do? You got to think about self-preservation, not like gambling to make profits. You want to survive. This is musical chairs. All you want is a chair. It doesn't really matter if you get the red chair or the blue chair or whatever. Just want a chair, man. That's what you want. And I think when people start thinking that way, they have a lot more fun. They get a lot better sleep. They enjoy their life more. They're more pleasant to be around. And paradoxically, they end up making more money. You do end up making more money because you're thinking straight. You're not thinking ideologically.
I think it's very good to think of right now in the financial world, a lot of crazy things are going on. But as you mentioned, we need self-preservation for our finances. And you mentioned, riveting stocks, for example, French fry stocks and stuff like that. I mean, it might not be the craziest thing in the world, but it's something, if you think about it, as you mentioned, it's still going to be around even if the system keeps going down. So can you share a bit more about that, about kind of what sectors people should be looking at right now if they want to outpace inflation? Because that's really the key here. If inflation is still hot, we need to have assets that are outpacing that.
Yes, that's true. And there are sectors where you can do that. I mean, there's another example that we're talking about in the newsletter is certain parts of the energy business. I'm not talking about like Exxon, Chevron, and all this stuff. Those are great companies, but I'm talking about there's things in America like we haven't built a refinery in the 70s, and we're not going to build any more refineries because they're ugly and they smell weird and nobody wants them around. And nobody really understands that you can't get the diesel for the trucks and the trains, all these things without the refinery. So, I mean, there's stuff like that these things make money. They have pricing power. It's fantastic. We talk about that in the newsletter. We talk about defense. I mean, the defense budget just is the biggest that it's ever been. Like it or not, defense is a big, the war machine roars along regardless of what happens, to dollar supremacy. But I know what you really want to talk about is the good stuff. I've got a Engelhard bar here, that I keep around as a paperweight, mostly because nobody's ever held silver. And you know what's amazing? Nobody will steal this because they don't know what it is, But I mean, of course, the good stuff is always fun to own. And the gold business is not. This is a 50 peso. As you know, it's about the same price as the silver bar. But nobody's really gotten into this yet. I mean, this crazy thing behind me, this Bloomberg. I mean, I think people think it's like a fake green screen, but it's not. It's very real. I've been on this thing for 2 decades. I mean, and I'm watching all these stocks, where I'm involved or on the board or something. I see them and I report back to the board and I say, look, I mean, the gold price is over 2,000. It's gonna stay over 2,000. Okay, we were uncertain for a minute, but this is a pretty powerful move. And more important, it's at a triple top. It's probably going to go a little bit higher. I don't think it's going to go a lot higher, but I think it's going to go a little bit higher. And the stocks have seen no inflow. So, I mean, what does that mean? Well, it means that, gold's not hot. It's not hot. And we're talking about this $300 trillion pile of debt. And there's a big pile of assets flushing around too. And none of those assets are really going into gold. And the central banks are buying gold. Yes. And, some rich people are buying gold. And, some conservative people have bought some gold. I know a lot of gold dealers. I'm talking to all these people, but gold is not hot. I mean, nobody is like, where can I get some gold? I mean, I have a great book on gold, as you know. It's probably like the easiest to read, most informative book on gold out today. And I can watch the sales of it, So I mean, if the sales are flying, then people are interested, and so I can have kind of my pulse, my finger on the pulse there of that business. So I mean, obviously, gold can get hot, but people need to understand gold's not really a place to make money per se. It's not like you don't like say, boy, I got super rich, owning all these gold coins. I mean, it's more like you sleep well when you have a couple of gold coins. And I think people was talking. I was at dinner with one of the biggest purchasers from the Mint in the whole country. I think the whole world really. There's only about a dozen of them. But we were talking about how people can kind of like go a little too crazy, with the gold thing. And they got like a gigantic portion of their wealth in gold. But most people have zero. So I mean, like if you take a cross section of the society, almost all these people have never even seen an ounce of gold. They have no idea where you would get it. They don't have any idea why you would want it or anything. And so, I think gold has a place. I don't think it's, like the cornerstone, but I think it has a place. And if you start doing the math and you think, well, if 1%, of that 300 trillion tried to find gold, it's impossible. So, I mean, that is a bullish characteristic, but it's a piece. I tell people like, look, I mean, I'm totally happy to own the French fry making king. I'm totally happy to own somebody that puts diesel throughout Ohio, Pennsylvania, the Midwest. Like, I'm totally happy to own that. And people say, what about the market? Is it going to crash? Probably not. I mean, and if so, you've got to be cashed up, right? You can't, Bank of America stock went to $3 in the financial crisis, but most people didn't buy any because they didn't have any money. So I mean, you got to be, I'm happy to buy stocks, but like I show people in my newsletter what I'm doing. I'm a trustee of a portfolio, so I have a responsibility to the trust. I can be fired, and I show people not the dollar amounts, but what I'm buying, right? And it's like, a huge percentage is cash and T-bills. So I'm buying these companies that I like, but I'm also sitting there saying, hey, man, this could get ugly. And if it gets ugly, what do you want to do with the money? If things get really cheap, what do you want to do with the money? And the answer is you want to be the person standing there saying, I'll take that Rolex off your hands, but unfortunately, only for $5,000. I mean, that's you can't do that if you say, I left all my money on my crypto wallet and I lost my phone or whatever. I mean, it doesn't work. So, I mean, you got to be thinking in this way. You're not trying to outsmart everyone. You're not trying to make a fortune. It's not the goal in life. The goal in life is not to, fly out like a hero or something for hitting a giant grand slam in the ninth inning. That's crazy. I mean, that's like a low probability outcome. The real goal is to not be the slowest camper out of the campsite when the bear comes.
No, when it comes to the precious metals, obviously you wrote a book on that, Why Gold, Why Now? You mentioned how you don't see gold going below 2000 again. Can you share with our viewers a bit about the recent run-up we've seen in both gold and silver and your outlook going forward here? Because I know it's been quite a big run-up, but it sounds like, in your opinion...
It's changed. It's changed my mind. Yeah, I was with... I was with at an industry conference maybe 2 months ago, and I was saying, like, we really need to watch out, at like 1680, because the gold was in the 17, maybe low 1800s at the time. And, the person was like, what do you mean 60? I said, look, I mean, it's the ultimate disappointer. Okay. So if you turn back down, right now, like, you need to be aware of where it might find its footing again, and you need to be aware of that. But that didn't happen, and so as we leapt up, and we leapt higher with nobody following, right? So, like, it's almost like nobody believed that we were moving higher. So we took that step, and then we took another step, and then we took another step, and now we've cleared 2000 pretty decisively, and obviously we need to hold that. It's common to sometimes make a little test. But if you notice, these little tests have been head fakes. They have not been real tests. They've been tests kind of to trick some of the algorithmic orders that are so this is gold and silver over here. This is happening real time, spot and futures. So you've been a little test, so you see orders kind of fill in there, and then you turn and go back up. I mean, tomorrow we have the March jobs number. I mean, all this stuff it's all happening. And if gold stays here and firms up, it's a high probability that it breaks out of, this is a triple top, so you've had 3 times now that it's, COVID, Ukraine, and now it's all gotten into this over 2000 range. And when you see that, whenever it breaks for the 3rd time, it typically catches people off guard. And I think what that means for gold is, like, you get up to, 2250, and that's a big number for gold. And that's, you're talking about what is the total value? 13 trillion ish, somewhere in there. I mean, you go up to, you're talking about adding $1 trillion to the value. I think it's realistic. I mean, but I'm not one of these people that thinks it's like to the moon or something. I don't think it's practical. I don't think that happens. But right now, what I would watch is, if you pull a chart up, which is really, anybody can do it. We'll do it in my newsletter. We'll look at it. It's easy to do. You see these 3 tops. Think of it like 3 little mountains. And when it breaks that for the 3rd time, it typically never comes back. And I mean, silver is a whole different animal. It's like I was showing you that this is the equivalent of gold and silver, like the size and the value. But silver's way behind. It's way behind. I mean, it's like way behind. And it has totally different fundamentals. It has totally different supply characteristics. Like it's similar in so many ways. And there's so many physical ways that it's similar, and like the properties, but price wise, it's got a lot more catching up to do. Also, silver mining is only about a quarter of it is direct mining. Most of it comes from other mines that then have a little bit of silver that they use as a byproduct. So I mean, it's got totally different fundamentals. And then people want to gamble on silver, and it's I stop gambling. It's like it's not necessary. You don't need to be a hero. I'm kind of like over silver. I've been in that market a long time. I do think it's going to make a big run, and I think a lot of people will have quit on it. And so I'm inclined to just hang tight with what I've got there. And just because you lose perspective, right? You get tired. That's what happens. When you're in the industry too long, or you're like too optimistic, you burn out of energy, and then you want to quit on it. And so it's really hard to be rational. And so for me, a lot of times what I'll do is I'll just sit tight and just, put myself in a position where I can sit tight, which means that's like these people emailing my newsletter with like 3-4 times leverage. I'm like, what are you doing? I mean, it's how do you know when the Silicon Valley Bank's going to fail? I mean, there was a guy that had all this figured out in January, and he was stunned that it hadn't failed by then. So, I mean, he was like the smartest guy, he published it all on Twitter. I put it in my newsletter, smartest guy. Even he was stunned that it took so long. So who knows? I mean, you don't need to know like the day, you don't need to be buying 5 times leverage because it's ridiculous. I mean, just, position yourself for what's logical, for the outcome that's logical, and put yourself in a position where you can wait. Like you can chill out and not have high blood pressure and be upset. That's the problem. So you get upset, and then you can't think straight, and there's no way that you can manage money. Managing money, by the way, is a long-term game. It's a long-term game. And if you think that, you aren't rich, you're crazy. Because if you're watching this show, you're rich, because it means that you are trying to learn. And believe me, like I was in that when I started out, it was very humble beginnings. I mean, it wasn't like I grew up living outside or something. But what I'm saying is that I was working, saving my money, and trying to figure out what to do with it for a long time. And so I'm just saying, you're a money manager. You got to see yourself as a wealth manager. You have an important job, and the numbers don't matter, because if you get that job right, the numbers get big. They get big because your thinking is right. And people, once they understand that, life gets a lot better.
All right. Well, E.B. Tucker, thank you so much for sharing your insights today. If people are looking to follow you, let us know where they can find the Tucker newsletter.
ebtucker.com. It's ebtucker.com. You can go there. You can sign up for free. We don't bother you with any promotions and nuisance marketing or any of that stuff. It's me to you from this desk twice a month. That's it. You get 2 newsletters a month. I hope you'll come and learn with me. We've been having a lot of fun. We started this late February. It's really fun, and it's going to become even more fun as things unfold. ebtucker.com.
Any last thoughts before we let you go?
Let's come back in the summer and see what's happened with the gold price. My suspicion is probably there's a Sunday night where we turn on the machine and it's $100 more than it was on, when the market closed the previous trading day. That's what hopefully in the summer you and I are saying, told you so. And I think that the patient players are going to be the happiest when that happens.
Well, if that happens, that should be exciting, and we'll definitely reconnect in the summer. E.B. Tucker, thank you so much for joining us today, and God bless.
Thanks for having me.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.